Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, April the 8th, 2025. As you know, today is Tuesday, Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following: do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4 hour, the 1 hour, the 30 and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. We're still within our chopping around zone. We have wave one complete up at 114.72. We're working on stair stepping lower over the coming years down in this wave two. Roughly around 80 is the plan. Big picture, we bottomed back at 2007 at a price of 70.53. 15 years later, we grinded our way up to our target zone of 115, 120. Top right at shy of that at 114.72. So what we're looking for is just a 7.86% retracement. And again, we're already in this almost 3 years now from the time we topped in roughly May of 22. We're almost at our 3 years later point, and we got a long way to go. So we're talking multiple more years to get down here, but that's the plan. Why is that important? Because if you know where the dollar index is headed, you know where a lot of asset classes are going, and that can help us out in our direction. So looking at the charting platform, looks like we are going to continue to break down. We already set the tone to go toward this 98 at the 1.448 level extension, followed by the 1.272 at 97.56. So where do we know and how we're getting there? Well, based on this prior swing point low to swing point high, we took out the 618, that 103 and change level. We tested it, chopped around it, finally made it obviously not only close below that level right there, but then we closed below this 102 level over here for a temporary period, but we did close below. So that says, again, we have a 75% chance. We're going down to 98, 70 plus plus, we're going down to 97. But that doesn't mean that we can't possibly rally back up some more, perhaps toward the Magic Fibo, bounce down. I was thinking we might have done it there. We fell shy. So again, you don't have to, but it's possible that we could get a little bit more rallying in here before the next push. Amen. But this is clearly in the shorter term where we're headed. The longer term is way down here, that 82 to 78 range. That's why I'm kind of summarizing about 80. And that's where I think we're ultimately going to finish up. And as we start declining, you can see what we call the Fibo ladder. And we would ping pong between these levels as we break down eventually, including some rallies into some upper areas and lower highs, lower lows. But we should ping pong between these levels in the coming years as we start heading down towards 80. That's the plan. Somewhere in this pink box. All right. So why is that important? Because inverse relationship with the euro dollar. Talked about, I thought this is a bottom reversal for the euro on this latest pullback. We go back a few years ago when we had that ridiculously low 0.95 below parity. I talked about that a few years back, saying this is more than likely a big reversal point, and we were going to have a multi-year correction. And we still believe we're in the midst of that. And even after this latest pullback into January, I said it's likely this is the bottom and we're going to start reversing back up. The plan and the big picture for the euro dollar we have on our charts. Just like this big picture for the dollar index is to retrace somewhere around this 80 zone. Well, for the euro, it's the inverse relationship on this monthly chart. We're expecting this retracement to end up somewhere around this 135 to 145 area. I'm kind of fine tuning it between that 140 and 145, closer to the 786 zone, just like the dollar index. Got it? That's the plan. So, long term, we talked about buying down here, up 1,000 plus pips. We got a nice correction. We did a beautiful 618 retracement and we bounced off of that. Now we got to do is start clearing the prior highs, break above the Magic Fibo line, and then we could start to watch this baby climb. So that's the big picture. On Tuesdays, we talk about Elliott wave. If you're an Elliott wave enthusiast, then we're looking at this two being over. Remember, we talked about from the high to the low. We need to break above that 618 to really feel comfortable this bottom was in place. But I kind of called it a little early, thinking, well, I'm going to go ahead and call it even though we weren't up here yet, we were still just starting to chop around. When I saw the low, high, higher low, we started to take out that level. That kind of set the tone that this looks like it is over. We're working on our way, way higher in the coming years, up to somewhere around that 140, 145 area is the plan. So long term, keep buying the dips for the next several years. Shorter term, I think this bigger correction is over, and now we should continue to stair step higher. As the dollar breaks down, the euro and the pound are going to continue to push higher. So, pound in the same type of boat, meaning that we believe the pound, based on the dollar going to 80, the euro would go up to 140, 145. Well, the pound should go somewhere around this 160 to 170 level, kind of fine tuning somewhere around that 165 area, is what I'm thinking. Amen. So keep buying the dips long term. And the short term, is this correction over? Go over here back to our charting platform. And we could see, as we were talking about the euro, let me finish up there, zoom back in. And from the latest swing point high to swing point low, we still had to wait until we theoretically broke above this 108 level, which again, this is what I call this bottom. We were going to make a nice move up. We should at least get a 618 retracement. Well, you can see we not only closed above that, setting the tone for the extensions, but we also closed above the 786, which sets the tone for our shorter term targets at 113.60, then 114.95. So, as we talked about buying the dips in the shorter term, continue to buy the dips because I do believe we're headed to this target. 75% chance from that high to that low, when we finally broke above and closed the candle body, that one right there, that set the tone. 75% we're going to 113.60. 70 plus we're going to 114.95, which is still hundreds of pips away. And the fact that we dipped and then we closed again yet higher, this is still looking good for this ultimate journey toward these targets. Now remember, this is not our final destination. This is just one of the beautiful stops along the scenic route upwards to that 140 to 145 target. So definitely keep buying the dips here, as I suspect we're going to get up to these targets. Pound dollar, very similar. So we might even come back to visit Magic Fibo. The pound did it. The euro fell a little shy. Pound ultimately came back to test that. Well, not a big surprise, Emil, from the low to the high, which I'm going to adjust it, which is now here. we didn't even get to a 618 retracement. It's way down here. So the fact that it reached the Magic Fibo, I'm not concerned. A little bit of aggressive move there. That's okay. We're still expecting us to go onwards and upwards to the 136. 75% chance we're headed to 136.20 area, and a 70 plus plus we're headed to that 137.97. Where does that come from? Prior swing point high to swing point low, same rules. We broke the 618, we closed above it, candle bodies, numerous days, and ultimately says we got a 75% chance we're going up to 136, 137. 136 right here is 75% chance. 137 is 70 plus percent chance. And now that we got this retracement, that's looking good. Even from the swing point low to swing point high, which is now there, that still gives us that 618 down here. See it right there? From this low to that high, 618 is roughly around that 125 area. So could we even go a little deeper? No problem. If we even get deeper, the deeper we go, the more I'm looking for this thing to rally. Because even if we were to pull back that few hundred pips more, it's 1,000 pips to get up to our 75% chance target. So while those odds are still looming, I like buying the dips like we've been discussing. Fair enough? Euro, dollar, yen. Be careful with the dollar yen. We're still holding that 618 level. We did dip below it, and we're still holding right in that zone from the bigger low to the high. I'm watching this closely. If we can close, you notice the wicks down in here. Wicks don't count. We need bodies to close down in here to set the tone. We're going to 136, 134. So I still think this is ultimately where we're headed, but I'm a little bit more conservative in nature. So I want to see price, force price to prove its intentions. And Mr. Tucson, what is the rule? From the low to the high, if we close below the 618 level, which is 146 area, then we have a 75% chance we're going to go about 1,000 pips lower. Notice we haven't closed below that level yet. So these wicks and reversals, that doesn't count. So that's why I'm keeping a keen eye on this. If we can close below that area, then I'm looking to go short down to 136. 75% chance we go to 136.80 area, and a 70 plus plus we go down to about 134. So currently, any big rally should be looked at selling as opposed to buying a dip, looking for this to go breaking out. Fair enough? But that's the big trade. I'm looking for another 1,000 points to the downside once we could close below 146. And that's a candle body, not a wick. Pound yen, also right in that same zone. Isn't it amazing? It's teasing us. It's absolutely teasing us. We dipped below that 187 level, but we did not close. We closed back above it. So I want to see a close below 187. And we get that, then we got 1,000 pip trade to the downside to 177. And a 70 plus plus, we're going to go visit this 175, 174.50 area. But again, force price to prove itself. So any big rally at this point should be sold, but the big setup is going to be when we start closing below 187. That's a candle body close, not a wick. Then we could set the tone for about 1,000 points down toward 177, 175 area. Fair enough? All right. A lot on the markets right now. Let's spend some time. ES. Amazing how quickly all of this freak out is with the markets. It's a talk of tariffs. It's this, it's that. It's doom and gloom. We're going into a major recession, Great Depression. All this is happening, all because of tariffs. Well, we talked about this exact thing long before the tariff talk, long before even who was even president coming in this new administration. We talked about this. Now, there is some major setups. Now, Emil, even with this hardy little bounce, I'm not convinced this is the bottom yet. Because as we look at these lower time frames, let's go to like a 4 hour. It looks like there's some unfinished business to the downside. And we stretch this out, and this looks like a beautiful, from this touch, one down, two up. So we got the 1, 2, lower high, big three wave down. So let me kind of compress that a little bit more so I can see the bottom. And I don't like these things on here, so let me see if I can get rid of all those things. This session breaks. See if that'll get rid of it. Okay. No. Oh well, I'll just leave it. We'll worry about that later. Anyway, just looking at this, based on that move, one down, two up, three down. This looks like a wave four correction. As long as we stay below basically this 155.50 area, which is that swing point low of the wave one down, we're likely going to get one more push. So this bounce does not look like this is a reversal to go breaking out. This looks like it's unfinished business where we need another push down to make a new lower low to set the tone for a bounce. Now, does that mean once we get down here and we start bouncing, is that the one we're going to get to the 64, 65, 6600? Well, we got a lot to prove because all of this big downtick, which we kind of talked about, let's go back several months. Remember, I drew these on the chart. We're at least going to come back to the daily Fibo and the 3 day. We talked about that where we sliced through it and went to the weekly. This is why you need to have the Magic Fibo on all your charts. It is truly amazing. What did we do? We sliced down, we closed at it, we tried to bounce and rally into it, and then failed. We can go to a 3 day to show you what that looks like. These levels are truly magical, magically delicious. And this bigger picture, you just see it looks like we just went down and now we're retesting it on the way up. So this is another reason why I'm expecting that we're probably going to get a lower high and a lower low to finish that 5 wave correction down. Once that is the case, it is critically important if that turns out to be, if we get a 3 wave correction back up off of that, and believe me, a correction is coming more than just the one we're seeing. So this little bounce, you said, well, Gary, this is a correction. Right. But I don't think this is the one that could potentially go to some new highs, all-time highs yet. We got to prove a lot of resistance levels before we could say, yep, this is where we're going. I think we do need one more flush before we are ready to start talking about potentially a reversal. What the bigger picture is that this could be that bigger degree A, B, C, and then we can get this A up, B down, C correction to get us up here. I'm kind of stuck between two places. I don't think this little move to the downside is finished. So if you're starting to get in and you're making a lot of profits up on this bounce, don't get greedy expecting we're going up here, right? This could be we need one more flush lower. And why do I think we're definitely getting a correction back to the upside? Look at our barometers, right? Look at over here at our barometers. That is this over here. Look at this, Emil. Look at these levels. How many companies above the 5 day, 20 day, 50 day, 100, 150, 200, all below that critical be careful zone of 20 and lower? Wow. That's telling us we got a bounce coming, right? We're clearly got a bounce coming. And I don't mean the one we're already under. I think it's going to be a bigger one based on the lower time frame. It looks like we need one more flush. And then on the higher time frames, anytime on a 200, this is how many companies above the 200 moving average. Let me bring this into perspective. How many companies above the 200-day moving average of the S&P 500 stocks? And we're all below, dipping at 20 and lower. Ouch. So that is a warning sign. The boat is tipped too far oversold, even though ratios are not that bad as far as price to earnings and all this. We could certainly drop a lot further. This is not, Elizabeth, I'm coming to join you, honey, yet. All of this correction with the tariff talk is not the Elizabeth, I'm coming to join you, honey. That's just part of that correction. It's scary. It got ugly those couple of days, but it still doesn't look like we're quite finished on a swing point low before we get this rally I'm watching here. So, Emil, I expect we're going to get what happens when you reach the top, you come back to the bottom. And then we reached the bottom, we went back to the top. Last thing we touched was the top. So, no big surprise, we came back to touch the 20 again. That's what we do in this barometer here. It's an oscillator, and that's typically what you do. So I do think we're going to rally back into this upper quadrant at some point. When is it going to be? Maybe we get this rally. If we get that blow off top I've been looking for, we'll probably rally back up into here to set up the big blow off top to then set the big next down move, which is that Elizabeth, I'm coming to join you, honey. Now, what could possibly be that I've been discussing is that I did say before we break 7,000, we're going to break 4,000, right? So maybe we don't make all-time new highs again. We got a lot to prove. Due to this damage, we got a lot of proof that has to come where price has to prove its intentions before we can start focusing on our 63, 64, 65. It looks like on the lower time frame, we need, even on this 3-day, you look at this, a 1, 2, 3, 4. As long as we don't get above that 55 and change area, that still would leave us enough room for the last push lower in that wave 5. Now, if that's the 5 wave down, we get a 3 wave correction into a 618 retracement. That sets the tone that this top is in place. If after this flush down, we can't break back above, opening our upper targets, and we get a 3 wave correction to a 618 retracement, then Houston, we have a problem. So the reason I'm still thinking we need a blow off top, come to the bigger picture like a weekly, and this just doesn't look, maybe I got to go out, let's see if I can condense this enough. I want to focus on the financial crisis low, which is way over here, back down here. So this is the low I'm most concerned with. And this move up, if you kind of consolidate this and move this back, is this like the big wave 1, wave 2, 3, 4? Still looks like we need one more push to kind of complete this thing. I've been kind of watching this and looking at it. It just doesn't look complete. Even if this ends up ending in an ABC, which is typically not the place, we should at least get another push to some all-time new highs. So in one breath, Emil, James, Ian, Eric, Harold, I don't think we're finished to the upside. I still think we need a blow off top to then set up the big Elizabeth, I'm coming to join you, honey. And on the smaller scale, just like this bigger scale, I think we need one more push higher to complete this big move. Then it sets up the big time move lower, which from this swing point low to if we get a high up there, that's putting us way down, 3,000, 2,500 range. for just a correction to come back and do a 618 retracement. That's a lot of fall coming from 6,000s to 3,000, 2,500. Ouch, right? So that's part of the bigger Elizabeth, I'm coming to join you, honey. I do think that is ultimately coming. Doesn't matter what they do, they can stop talking tariffs. They can go back to, let's go back to just spend all the money and not worry about the consequence. Well, I can assure you the worst alternative is to let this country go bankrupt. If we go bankrupt, the global economy is going to collapse. We're that big a player in the overall picture. And as you can see, we're talking tariffs and everybody's markets are falling apart just to play a level playing field. So the alternative is not to just keep spending money and worry about it later, kick the can down the road, because we can't sustain that. I think this is what needs to happen, and this is going to happen no matter what, no matter if we had Kamala in office, continuing to spend money, whatever she was planning to do, this correction is inevitable. It does not uh, worry who's politicians in office and what policies they're pushing. It's the corrective action of price action, right? It's just the nature. I digress, but you get the point. So one big breath, we expect to push to get a blow off top. The other is, I don't think this correction is finished on the lower scale because this move does not look like it's finished. From this latest touch, one, two, three, huge extension. That's got to be a wave three because it blew past all of these extensions and then the four correction. We're in the zone, Emil, for this correction up until we start breaking above that 50 up here, that 55.50 area, which would be my one, two, three. So this 55.50 area is critical to kind of set the tone what we're about to do. So this up here is all eyes need to be watching that. Amen. So this is why I don't think this is quite finished. This looks like a one, a two, a three, a four, and we need one more push. What am I looking at? Somewhere around about 4,800 to maybe 46, somewhere in that zone. Before this push is done, then the trouble could begin. Because if we get down here, and we don't have to go that much lower, but anything below this swing point low would fill the bill to do this overlapping correction. And then that would allow potentially for the bigger bounce to go up into these extensions and make all-time highs, or set up the big doom and gloom three-wave correction, stop in its tracks up at a 618, which I'll show you what that zone is, and then we get the next bigger move down. So I'm not going to say I guarantee, Mr. Tucson, we're definitely going to get all-time highs again. I was much more adamant about that than I am right now, but both pictures on the higher time frame looks like we still got to have something left to finish that blow off top. And then on the lower scale, this current swing point low does not look like it's finished. And then it'll give me great insight if this new low comes into play and we're able to cross above the 618, then it sets up the big move back to the 63, 64, 6600. If not, and we get a three-wave correction stop in its tracks at a 618 level and fail, then it kind of puts this as being that, well, I said before we break seven, we were going to break four. And if we do a three-wave correction, that sets up the next big move, which could be several things. Is this top and reversal wave one? Right, let's use a little marker. Is that the wave one? We're going to get that bigger correction in wave two. Then it sets up the bigger move down in three, which would put us somewhere down in the lower threes, 35-ish, maybe this monthly Magic Fibo down here. And this could be our bigger move, right? This big one down 2 up, 3 down, 4 up, 5 down, and ultimately end up where we're chasing that bigger degree correction, which is the financial crisis low over here. Everybody feeling me? I guess I got to go out to a monthly or a weekly. Let's do monthly, make it easy. So our financial crisis low, which is right there, puts us in the 600 zone, right? That's what we're looking at. From the high, we get the blow off top. We would expect to come somewhere around that 618 retracement, which would still even put us somewhere around 2,500. And again, we would even get, let me take some of these out. You can see that bigger picture. I'll take them all off and clean the chart. I can get my drawings off of here, remove, and I'll show you what that bigger picture looks like. But this is serious business. And please be careful because I still think we've got some unfinished business. We do need to take off a blow off top. On one higher time frame, on the lower time frame, looks like we still got to get another swing point low. And I got so many of these. We've been tracking this daily, weekly, monthly for many years now. So from this low to this high, get this out of the way, we're almost there. But from that swing point low, get all my lines off of here. I know there's a little device somewhere in here. I can get rid of all my drawings, but I'll just do it manually. And I'll redo this as we speak. Couple more, almost done. So this is the big worry, is this financial crisis low. And this big run is where I think, Elizabeth, I'm coming to join you, honey, is going to correct from. And again, if you look at this as a 1, 2, 3, 4, it looks like we're, well, as you drill down, looks like we got some unfinished business there to the upside for the blow off top. But just looking at the high to low, man, how many lines I have on here? I'm going to find that button so I can get rid of all this and just have a clean chart. But we're almost there. Take all this off, start over. And we're looking at that big picture, high to low. Wow, there's a lot of stuff in here. We're almost there, Emil. All right, and get that out of there. Okay. Stretch that out. So what I like about ES in this one picture here, it shows the low I'm interested in. So from this swing point low to the current swing point high, we're looking at somewhere around that below 3,000. 618 is 2,700. 786 is 1,800 zone. This would be in tune with what we're expecting on the Elizabeth, I'm coming to join you, honey. Big time correction, massive correction. And I don't think this top yet, can we call it a top? I still think there's some unfinished business and we're going to get a blow off top. But this correction down into the zone below 4,000 is inevitable. Amen? So if we look at that and we say, well, the big picture, once that's over, and if this is the low, this is the high, and we come somewhere down in the zone, then look at these lofty targets years and years out that we're talking about, 8,000, 10,000, etc. So I do think this is ultimately going to be a correction that could last years and could prevent us from making all-time highs for multiple years, like we did over here. This big correction here was multiple years. And when we talked about when we topped out back at .com, we didn't break until 213. So it was like 13 years later, we finally broke all-time highs. to continue. But it's not all doom and gloom, even with the correction, because we can make a lot of money to the downside. But once it's over, look at the lofty targets back to the upside. We're going to be down in the 3,000 range-ish or lower, somewhere in that target. We're talking going up to 8,000, 9,000, 10,000. That is massive gains, like one of these big pictures. Correction, another push higher. Got it? All right. Whether you look at SPX, kind of the same thing going. On the smaller scale, it doesn't look finished. On the larger scale, looks like we're not finished either. That this just doesn't look like that's the end of the big run and we're ready for Elizabeth. I'm coming to join you, honey. Still looks like we need one more push. And what that really brings into play, if I can zoom this up enough for you, and we can call your attention, is this move from the prior high. We're dipping into that level. So you can see this prior swing point high, we're dipping into that level, which tells me this looks like it's overlapping corrective. So we still need one more push higher, right? If this is going to end up being an ending diagonal, Mr. Tucson, because this can't be wave 3, 4, 5, well, 2, 3 going up, 4 correcting, because it should not go into the area of the prior wave here. So this can't be 1, 2, 3, 4, because we're overlapping. What it could be is a ending diagonal, and that would mean the same type of move, that we need one more blow off top to finish that ending diagonal. Still get us up to where I think we're going. So I don't want you to think, oh, so you're not going to go to 63, 64, 6,600. I still think we deserve it. We need it. And I deserve it as in price action needs to have one more blow off top. But be careful, because I'm not convinced this current swing point low is that low, right? So we're kind of torn between two. Bigger picture says we need one more push before the Elizabeth, I'm coming to join you, honey. And on the smaller scale, like the 4 hour, it's kind of screaming just the opposite, that we need one more push lower. 1, 2, 3, 4. So you can see up again around that 5,500 on SPX. If that's the wave 1 down, that's the 2 correction. And this is 3. Then wave 4 should not go into the area of wave 1, which is up here at that 55.50 area, 55 plus. So if this is going to deserve one more push lower, this should stay below that swing point. Everybody with me? It should stay below that swing point. And you can say, well, if I really want to look at this as the bigger picture, even on the smaller scale, 1, 2, this looks like another 1, 2, 3, and it's kind of like in the same boat. Or this could be a 1, 2, 1, 2, and I don't want to bore you with all the 1, 2, 1, 2s, all that, but it's stating the same thing, that this rally is likely not going to go breaking above, probably test the 5,400 level and get rejected to give us one more flush. Now, I do think a bigger correction and a bounce is coming, because again, the boat is tipped. And what do we talk about with the boat being tipped? This. When we look at this bigger picture and all aspects, 5-day, 20-day, 50-day, 100-day, 150 moving average, 200 moving average, all were below 20 on that push lower. The boat is tipped. But again, based on the lower time frame, I'm not convinced that this bounce is the one I'm looking for. I think the bigger bounce is the one when we finally get this correction. Do we get that final blow off top? So this is not out of the question. But again, once we get perhaps one more flush, that would set the tone, and then we can get better direction from that point. So be extremely careful on this bounce. It probably will fizzle and get one more push. Is it going to be our calendar perhaps that does it? I can't imagine FOMC minutes, which is this week, is going to make the big difference. But I mean, what can the minutes say that we don't already know? That's tomorrow, FOMC minutes. But it could be perhaps it's Trump speak, talking about how many countries are ready to negotiate on tariffs. And you hear in the headlines this morning, well, there's hope of tariff talks, so the markets are bouncing. Well, that's the technical picture. It's going to bounce no matter what they do. It's just time for a small bounce, but that's why I'm warning you, be extremely careful. Caution is the key. And if you took some of bounce and you're in trade, I'd be sure I'm booking in solid and locking in some profit zone because we may get that last push lower. Then we get the bigger bounce. And I'm just trying to look at the calendar. We don't have a whole lot here that could be the reason it happens. Maybe it's FOMC minutes tomorrow. Like again, I don't know what they could be talking about. There's a lot of jawboning coming this week. Logan, Bowman, Schmidt, Goolsby, Hawker, everybody and their brothers got to speak. So maybe it's some of that this week that does it. Amen. And then later we have our, on the 11th, core PPI. And then on Thursday, we got CPI. So perhaps it is, Mr. Tucson, the CPI, PPI that helps with either the flush lower to finish, or perhaps maybe it's the one that gives us that bounce that we're talking about. So, in closing on ES, this tells us we got a bounce coming. And I don't think the bounce that's currently underway is the one I'm talking about. I think we're going to have that bigger degree talk as the boat is tipped looking at this. So what does that mean? That means based on the lower time frames, we need one more flush lower. Then we get the bigger, more time consuming correction. And if you just look at that picture as we speak, this does not look complete. That's why I think we need one more flush lower. And what are we talking about? Well, all we got to do is break that swing point low. So 4,800, we dipped in the 48s. 40, just below that's fine. Or we could go a little bit deeper to this little battle zone area, 46, 47 area. That would work. Then it could set up. Again, this could be either the blow off top or we're not going to get it. If this ends up being a 1, 2, 3, 4, 5, and at that point, if we don't go breaking out to make our all time highs again, and we end up seeing a three wave type of correction that stops from the high to the low. So let me get you that number. I'll take this off for a moment, and I'm going to take that prior swing point high to the current swing point low and give us that number from the last all time high down to the current swing point low. We're talking we got to break above that 57 to 5,800 level. If we start closing above this zone, then say hello to the blow off top. But I don't think this is the bottom yet. So what does that tell us? That we likely need this last push. And it still kind of has in the zone, so around that 5,600 to 5,800 zone. Even if we get that last flush, which hint, 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 I believe that's where we're headed. So be extremely careful on this bounce. Don't get greedy thinking this is the breakout. If I'm wrong and this is the end, which it's possible, I mean, it's definitely possible it could be over, then we need to break above this zone to set the tone for our upside targets. Amen? And if this is the current swing point low, then Emil, what we need is a daily candle body close above this 5,700 level. We get a close above that and above the Magic Fibo. Then we can start talking 63, 64, 65, maybe as high as 66 area. Amen? Again, short term, this looks like it needs one more flush to set the tone. And then when we get a new swing point low, then we can look at if we start breaking that zone, then yes, we're going to get that blow off top. If we get a three-wave correction and it stops in its tracks in this area, then that sets up the much bigger degree, and it's look out below, because what would that look like? All of this could be wave one down. We get that three-wave correction we're talking about in a wave two. We then get that big push in wave three. That puts us down here in that mid 35 ish, 38 to 35 range. And if that's the one, this is the part of Elizabeth, I'm coming to join you, honey. If this is the one, three-wave correction, we get the two. Three comes down in this zone. Then we get a wave four correction, not to go into that area of wave one. And then we get the wave five down. We could be visiting 2,500, some of these very low numbers, right? That's where that comes from. So it's very exciting, yet kind of nerve-wracking times when you watch the tariffs evaporate 10% decline in ES in 2 days. That was a lot of price action made in a matter of a couple of days. Everybody good so far? So, short term, I don't think this low is the low in place. I think we need one more flush. Amen? So, any big rally, you should definitely take your profits and be prepared for one more flush. Then don't fall for the doom and gloom of the legacy media and everybody else. It's all doom and gloom. We're being destroyed. We're going down to zero. During this flush part, we're still got our setup for the big bounce, right? And it may be a corrective bounce, or it could be the blow off top type of bounce. But that's where this comes into play. This is screaming the boat is tipped to the wrong side, and that's oversold side. Look at the fear and greed. It's insane. It was four and it's five. Now it's ticking up just a little bit less to seven because of that. So, technically speaking, we're going to get that bounce. No ifs, no buts, no ands, no exceptions. We are definitely going to get a bounce. And I'm not talking about, well, Gary, duh, it already bounced. It went from 48s down here to 52. That's a 400-point bounce. That is your bounce. No, that's not what I'm talking about. Does that make sense to everyone? I want to be crystal clear. This is more than likely, we're not going to go breaking out to these all-time highs yet. That if this ends up being that correction, then it's likely if I'm wrong and this is the bottom, and we do go to this blow off top, which again, I think we will, but it shorter term looks like we need one more flush before we can potentially do it. Then we need to start getting above 5,700 and above the Magic Fibo. We start to do that, then by all means, we can start targeting some all-time new highs. On the daily chart, we can see that's right around the same area. The 4 hour and the daily is roughly around that 5,700 area. So we get a bounce like this and a big recovery. Ooh, it's the tariff talk. All these nations decided they're going to wipe out the tariffs and play, legal fields, and the market's starting to take that in consolidation. We're ready to go. Well, you need to put the big number. You know that only 34% of all the US population have a 401k? So when they talk about this doom and gloom, well, everybody with their 401ks and retirements is taking a beating. They lost $7 trillion off the market. These policies are horrible. It's the worst thing possible. Well, what's the alternative? Ignore it, continue to spend money and go bankrupt? Well, we go bankrupt, then nobody has Social Security, retirement, Medicare, Medicaid, no government. It'll go bankrupt. There's no more money. But the tariffs could bring in enough money to pay taxes and alleviate taxes from a lot of paying individuals, or certainly lessen the load of tax paying. And I don't know who wouldn't be in favor of paying lower taxes, no matter what your tax bracket is. It'd be nice to pay less taxes if no taxes. Well, how do we replace that with tariff monies? Sure. Then we can start to not only pay off the debt and settle things and get us back to a fiscal responsibility, but cutting all the waste, fraud, and abuse, that can save billions to trillions. And then all the tariff income coming in can make billions and trillions over the years and pay off that debt. That's the best alternative. And yes, there is going to be pain. And no, Emil, I don't think this is the pain that we're talking about. It might be painful, or it could be very joyous if you trade a little bit to the downside. But we kind of talked about this before we get the blow off top. What did I say several weeks and months ago? Before we get that blow off top, I think we at least need a retracement, and likely could be a deep one going back to as low if the 3 day Magic Fibo didn't hold, then we'd go to the weekly. That's where we are. So even with that, and I just said, well, Gary, you just said we might need one more flush lower, right? But look where the Magic Fibo is here and where we dip to. I'll zoom that in. This is why you must have this on your chart. Absolute must. And we went right to it. Well, what's the next line of defense? We got this 46 prior swing point high over here from August 2023 high before that pullback in October 23. That zone of about 4,600 up to the Magic Fibo, which is our 4,900 zone. So this is why I could even stretch this out from 49 down to about 46. So this is where, if we get that last flush, 1, 2, 3, 4, 5, I would expect us to stop and then reverse out of. So all I'm asking is please give it time, that if we do get the flush, you want to buy, right? We get this flush down in here. You don't want to fall for the doom and gloom. It's going to zero. You want to buy this opportunity because we're going to get that correction. And all roads are leading to a big type of correction. And again, if we look at the high to the low, and if this isn't the low, we go a little bit lower, then we're still talking somewhere around that 5,600 up to 5,800. If this is the low, then we should still get a correction up to about 5,600, same kind of zone. So watch this closely. If we start breaking above this 55 and change right there in SPX, then this kind of says this might be a bottom and we could potentially be looking at a bigger blow off top still coming. If this is this 5 wave move down and we get a 3 wave correction and stop in its tracks at that 618 retracement, then we're not going to get the blow off top. That really puts a damper in this. Amen? So it's too early to call to say that this is off the table. On that bigger picture, this does not look complete. It looks like we got one more push going, right? If you use this, 1, 2, 3, 4. So as long as we don't go below this 4,600, which would set the tone for what I'm looking for, a little bounce, one more flush, stay out of this zone here, the 4,600 zone, and then we go up from there and that last wave 5 top, blow off top, boom, into the 63, 6,600 zone. Then we start the big Elizabeth, I'm coming to join you, honey, move that will take several years. All right. What about NASDAQ? Kind of similar. We came to the weekly Magic Fibo. We're bouncing off of that. Is this the end? And we're going to go blow off top? Or are we going to yet to go? Well, it's kind of the same. This one a little bit different. This one looks a little bit better for the fact that ES went on to make all-time new highs, where the NASDAQ 1-2 made a lower high. And is this the end? 1, 2, 3, 4, 5. We didn't go into the area of wave 1. We're shy, right? And this is 1, and that's 2, and this is 3, and that's 4. We did not go into the area right there, Emil. That made a lower high. This could be the beginning of that 1, 2, 3, 4, 5 to finish that bigger 1, 2, 3, 4, 5. Got it? So it's subdividing. So this may be over, or we need one more flush. I'm leaning toward one more flush. Then it sets the correction back up, because even the NASDAQ, extreme greed and all the things we're talking about, come over here to this big picture again and look at the NASDAQ down here. It's all at extremes. Starting to get the bounce on the lower time frame from that. But look at all these, well below 20. And if we look at this one, we dip below into that zone below 20, down about 16, 17. So the boat is tipped for our markets to give us a bounce. The question is, when that bounce starts, is it going to be the blow off top to all-time highs, or is this bounce going to lead us to a three-wave correction that turns into, uh-oh, this is just the beginning of a much more massive Elizabeth, I'm coming to join you, honey. Fair enough? All right, but all of these are the same. You look at Russell, Dow, same thing. Even the mighty Dow on a 200 moving average dip below. So do we get a blow off top? If we do, I think we're going to go back to 80 and above. If we don't, then we probably won't go quite that high. We'll get that three-wave correction, and then we'll set up some more downside. And this will give us a bounce and then another push lower. Kind of like one of these over here. You get to extreme, you get a bounce, and you get another flush, right? Or here, you get to extreme, you get a big bounce, you get another flush, you get another bounce, you get another flush, and we start going down. This is ironically the big financial crisis over here. So be careful with this initial bounce, because based on the lower time frame, looks like we need one more flush. Amen? Be extremely careful. And yet, the same bigger picture, like the weekly, also looks like we got unfinished business, aka that blow off top, to the upside. And right now, kind of the same boat. You look at that 2021 high, we dipped down into that. So if we're looking at this from the financial crisis back here, actually, I got to go a little further from that much bigger picture. If we're looking at part of that 1, 2, 3, 4, this observance of this last move up does not look like a completed fifth wave. That I still think we need to blow off top, which would put us in that 23, 24, 25,000, maybe 26,000 range. Amen? So kind of stuck between the two. Higher time frame says, Ian, we'll likely need a blow off top. Lower time frame at the moment says we may need one more flush. So I know it's a lot to take in, but this is part of the current price action right now. So if you took this bounce, this looks like it needs one more push, right? Got to break this zone. So 1, 2, 3, 4 correction should not go back into the area of wave one. So if we fail in this zone, we get that one more flush. Then I think that's going to be that bounce. So here's what I think. We're probably going to get a fizzle and get one more push. We don't need much more of a lower low. We don't have to go way lower for a lower low. We just need a slight lower low. Looking at our network of this, we're due because the boat is tipped to dramatic sell off. We're over tipped to a bounce. And I don't think this current little bounce, which I mean, it's not that little, it went from 16.5 up to 18. So, I mean, that's quite the bounce. I don't mean like, not a few points, that's 1,500 points or so. But I don't think this is the one that I'm referencing. I think it's going to get a flush. Then we're going to get the much more time consuming, bigger type of bounce. And that sets up, do we get a blow off top or do we get the, uh-oh, we're already topped and reversed. And this is just the beginning of, once we get that last flush, that would be our wave one. Then we get a three-wave correction, stopping at a 618 retracement. That would be a wave two. And then it sets the tone for a lot more downside into where we were in that financial crisis so long ago, putting us way down here. I'll go to the monthly and set up some extremely low targets. Ouch. I know it sounds insane, but we could talk somewhere in the 10,000 range. And if that doesn't hold, then maybe we come back to this .com bubble burst top somewhere around 5,000. I mean, this thing could get ugly quick. I don't want that necessarily, but if we were to do such a dramatic, huge sell off to where we got down to where these levels are, this would be major buying opportunities. So I still think this dip is, you can't say it's just a dip. Buy it. Well, you're definitely going to get that blow off top. I won't say I bet your life you're going to get the blow off top. I still think based on this higher time frame, this latest correction does not look like that's the end of the pop, and we will get that blow off top. But first, lower time frame, I'm just repeating because it's kind of some interesting times right now. I don't think this bounce is the bounce I'm looking for based on our barometers and all of our 50-day, 100-day, 150, 200 moving average. How many companies above those levels? The boat's tipped for a bounce, but I don't think this little bounce so far is the one in referencing. This will set up later. So if we can get that flush one more time, down here is a good buying opportunity, man. We flush down here, make a slight lower low. Somewhere we get that lower low, this would be a good buying opportunity, and we should at least get a 618 retracement back up. And what is that number? Well, use a 2-point tool, and you come from all-time highs, this high, to the current low, which again, I'm not convinced this is the low. Probably go a little bit lower. Then we're talking somewhere around 20,000 Magic Fibo line. What I don't want to see is we get the flush I'm looking for, then we get a three-wave correction, and we stop in our tracks right around that 618, 786 zone, Magic Fibo level, and then we get rejected because that could start the tone with, like I was saying, 1, 2, big move down in 3, which would probably get us to about 10,000. Right? Kind of what we're thinking, way down here. So if this ends up being the one and we get that three wave correction and we stop around that 20,000 or so and we can't break it, and that's the wave two, and we set up that big push lower in wave three, four, five, we might end up somewhere around 6,900, maybe even 5,000. Ouch. You're out of your mind. It was up at 22,000. We can go to 5,000. Well, but kind of what this is saying, when you go way back in this monthly, we go way back and we look at where we were in this dot-com bubble burst area, where that high is, and then also in 2017 area, kind of that zone. So I'm thinking 10's the minimum. If that ends up being an ABC, 10 might be the minimum. We start breaking back out. But if this ends up being that 1, 2, 3, 4, 5, then the tone is set for the 7,000, maybe a retest of this 5,000 range. That's part of the Elizabeth, I'm coming to join you. So minimum, I think we're going to come down about that 10, 11,000 range, which is our monthly Magic Fibo at the moment. Okay. So in closing, I'm not convinced that the current low is in place for us to now reverse in a V-shaped recovery into all-time highs. I still think on the bigger picture, we do need a blow off top to finish this picture for Elizabeth. I'm coming to join you, but I'm not convinced that this current swing point low is it. So, in order to change my mind on NASDAQ, we need to break back above the magic Fibo, which would be from the high to the low, start breaking above that 20,000 area. That would set the tone for this to go on to make all-time highs. If this is the bottom, that's a big if, right? So we need some continuation rally of over 2,000 points or so for us to start talking really 21,000. You kind of see it from the high to the low. We got a 61820, 786 is right around 21. So this magic Fibble level is minimum. We need to start closing above that to start pondering, do we get to 23? Do we get to 24? Do we push toward 25? Blow off top. In the interim, just because we get the lower high and another lower low does not mean this is off the table. Amen. When do we start to say, uh-oh, Houston, we have a problem? That's not going to happen. This looks like our top. If we get this last push, make a new low, then we end up with a three wave correction that stops in that 618786 zone and we get rejected. Then again, it's setting up either a big A, B, C to get us down to about 10,000, or even worse, we get a 1, 2, 3, 4, 5, which would probably push us down to somewhere around that 7,000 to 5,000 range. Amen. Russell, still looking for the bounce. We did get some smaller bounces in there. We talked about it the other day. We got a nice bounce. But tariff talk and all these other things, I don't think we're breaking all time highs on this one. Blow off top for this is putting us, and again, the lower we go, it kind of pulls that 2,300, 2,400 target down about 21 to maybe 22. We'll see where the low comes into play, but I'll go ahead and show you what I'm talking about on that. And that's going to be a blow off top for the Russell. Not an all-time high based on that, but that's just going to be the blow off top. If all of the others give us a blow off top, then we're talking we could see, and I kind of like my lines in here. But anyway, I'll just take them off for aesthetics for the moment. And I'll replace that. So let me stretch that out, bring this into perspective. On this latest move, this is kind of overlapping. We got a 1, 2, 3, 4, 5. Is this over? 1, 2, 3, 4, 5. Is that over? And we're ready for that correction? Or do we need on a smaller scale 1, 2, 3, 4, 5, last minute flush? So again, I'm leaning short term more to finish this push lower and one more flush. Then we get a correction, and the correction would be on this one, no doubt, that even if that ends up being a bigger degree, then we get a three-wave correction. The highest I think we're going to go is back between, right now you can see from that high to the low. Let me do that first. Get this out of the way. And I'll take the current high to our current low. You can see where that 618 comes into play right around the Magic Fibo level at 21, basically 2200. So because we flushed even lower, that pulled our 2324 target down to about 2223 level. See what I'm saying? Everybody good? So there's your 618. Here's your 786. So because of this recent flush down into a low of 1700, it pulled our correction down with it. And even with the blow off top, where NASDAQ goes make all-time highs, Dow makes all-time highs, ES makes all-time highs, I think it's going to limit this into what looks to be a three-wave correction, and we get up toward that 21, 2200 now instead of 23, 24. Amen? In the short term, again, looks like we might need one more flush before we set up that three-wave correction. Any questions? So be extremely careful. If you bought this bounce, bought that bounce, or you took some profits, otherwise, what's setting up big time for this, once we get that bigger correction, and here's that bigger view, from the high to the low, the lower high, double top, it sets up us going down to this 1200 range. So we could be a big, huge put spread. Emil, we get that three move up to the 21, 2200 level, and we do a put spread from 22 shooting for 12 or lower. That's a big 1,000 point decline, massive, from 22 to 12, basically almost half. That's what I'm looking for. So when Elizabeth comes to join you, honey, we get the blow off tops, hopefully on all the other markets. And what that means for the Russell, we start getting to that 21 to 2200 zone. Then I'm going to look for a put spread as far out as I can go, shooting for us to come down at that 1200 because we have to break below 16. This overlapping, chopping, corrective action, this looks like a big, and this can't be a wave two if we made a new high. This could potentially be a wave two if it topped out, a very deep retracement. So I guess we got to go back and see, did we actually make a new high? 2413, 2440, 2450. Looks like 2450 is the highest. Let me kind of zoom in on that. Maybe I'll go to a weekly and see it a little bit easier. Stretch this out. And that swing point high, 2450, 2460, okay, 2460.8. Looks like the high there. And did we get above 2460? 2477. So this too says that this can't be a 1-2, right? Because we broke it by a one tick is enough to, can't be a 1-2. But this looks like it's a what? ABC. All of this corrective action, and this looks like a triple bottom, but I guess you can do the numbers. Is this lower or that's lower? So either this is the A or this is the A, whichever one's lower. All of this is the B, which again, wave Bs can break above the prior high. And then we get a C down, which would bring us back to an expanded flat correction. We're at least going to come down and make a new low and could extend this down into the zone. So I definitely think a high probability we're going to, when we finally get this three-wave correction to 21, 2200 level, we're going to get a push down to about 1200. Amen? That's the plan. And because this was just designated as going to a higher high, that cannot be a 1-2. So this has to be an A, B, C. And if you're interested in all that tells me is when we get to 21, 2200 level, sell and look for this thing to go dramatically lower into our target zone, probably shooting for 1200. I'd probably do between 14 and 1200 as my target zone from 21, 22. Big, huge, juicy move down. IWM, again, I still think we're going to get a bounce. No doubt about it. Definitely think we're going to get a bounce. But on the shorter scale, be careful. This does look like on this weekly 1, 2, 3, correction 4. We need one more push. One more push. Then we can talk about, and it doesn't have to be much lower. We're not talking, massively lower, maybe 160, 150, maybe that low. But all we got to do is get a slight lower low than this low. Then that would set up that three-wave correction. And again, on this one, we do the same. You take this down to the new low, which I do think we're probably going to get that 1, 2, 3, 4, 5, get one more push lower. Then we get a 618 type of retracement, somewhere around that 220, maybe 230 area, which probably even depending on how much lower we go, maybe that's 210 to 220 instead of 220 to 230 kind of thing. And then we look for the extension back down. You're talking 119, even 100 or lower. Ouch. Right? Break it in half on the way down. Any questions on this? Dow, kind of sitting up. All of them hit the weeklies, bouncing off the weeklies. Again, is this the 1, 2, 3, 4? Do we need one more push? Probably. If this is 1, 2, then this is 1, 2, 3, 4. Still need another push lower. So that's why I'm saying be very careful on the bounce. As much as I know we're going to get a bigger bounce, I'm not convinced this smaller time frame bounce is the one. So even on the Dow, the much bigger picture, I still think we need a blow off top. That this correction low is probably not the end. We'll probably go a little bit lower. Then it either sets up a three-wave correction. In Houston, we have a problem. We got a top and reversal already. Or we then get that correction that sets up where we start breaking the high to the low. We break the areas we're not supposed to break to then set the tone shooting for our extensions. 145, 45,000, 46, 47. So if you had to say, give me a number, I still think we're going to get a blow off top. But in the short term, I'm not convinced this little swing point is it. I think we're going to get one more flush Then we'll start rallying into late summer, fall, give us that blow off top. And then we're going to get the Elizabeth, I'm coming to join you, honey. Now, if I'm wrong, Harold, and we get the little short term flush, then we get the correction, and we would do the same. You take the high to the low, and I'm going to move these out of the way and start over. Let me get a few of these things out of the way. But here's the Dow, and we go ahead and remove them and put a fresh one in here. This could be the begin. This could be maybe that's it, and we don't get a blow off top. But on that bigger picture, it still looks like we got one more push. And all we're doing is retesting the prior zone. So if you look at this, well, this is a 1, 2, 3. We're coming into area wave 4, which we're not supposed to, right? We're right at it. So we're not supposed to do it. If we go any lower, which I think we probably will, that means the blow off top, which fits the mold. Typically, you get an ending diagonal to set, to set the tone for the top and reversal. And that's what they call blow off tops, is through these ending diagonals. Very interesting that these markets are setting up and looking like on the higher time frame, we need a blow off top. And even if you start taking it from the COVID low and you start saying 1, 2, 3, 4 overlapping, which we already, you look at the high that went to 36.6, and this low went to 36.611. This was 36.69. The Dow is expected that this low is probably not the low. We're done. We're probably going to get this fizzle and one more push. Then we get a three-wave correction. I'm going to come back over here. So to match what we've been talking about all morning on the markets, I'll stretch that out, bring this into perspective, is this looks like we got one more 1, 2, 3, 4 bounce down in 5. So it looks like we need short term one more flush to then set up a bigger retracement. Now the question is, at that point, Harrow and others, do we get this last little push? Then do we get a three-wave correction that stops in its tracks around the Magic Fibo to set up the much bigger down move? Elizabeth, I'm coming to join you, honey's already here. Or do we set up a correction that allows us to have that blow off top? So bear with us in the next weeks and months. This picture should become crystal clear. Right now, we believe we need short term, one more flush. Then do we get a three-wave correction to set the tone? We're going, Elizabeth, I'm coming to join you, honey, and there will not be a blow off top. Or do we then correct, start getting above the Magic Fibo to set the tone for our extensions, which put us into the 45, 46, etc. So we can do it from this latest swing point high to the current swing point low, which again, I think is going to be slightly lower than what we are. But for now, we need to break back above the Magic Fibo to set the tone for 46, 47, maybe 50. If this plays out on the shorter term, Harold, because this looks like it needs one more push. One more push. If that's the case, on this lower time frame, it looks like a 1, 2, 3, 4, one more push, 5. Then all you do is take that number and bring it down to where the new swing point low is. Not really going to change the picture too much. It's still, do we get above the Magic Fibo? Yes or no? If the answer is on that bounce, we do, then we start to look for the blow off top. If not, after we get that last little push and we do a three-wave type of correction and we can't get above the Magic Fibo and we bog down in this area, then this is either a 1, 2 setting up the big 3, or at least a much bigger A, B setting up a C, which in either case, that Elizabeth, I'm coming to join you, honey, is going to be ugly. And we're talking, we have to go back on, say, a monthly, probably a monthly chart just to see it. And we're talking about that financial crisis low over here. So I mentioned this with the ES, the NASDAQ, all of them. We're more interested in this financial crisis of 2007, 2009 low, this being the big run up. So in the higher time frame, this doesn't look like it's finished. It looks like we need one more blow off top. Amen. Then we get the bigger Elizabeth, I'm coming to join you, honey. And we're expecting the Dow, look where that 618 is from the high to the low. You're talking somewhere around 12,000. Ouch. So we're looking for a very big retracement when Elizabeth, I'm coming to join you, honey, comes. Minimum like a 618 retracement. Minimum. Which would put us from what? 40,000, 45,000 to 15,000 area? Ouch. 12,000? Depends where the blow off top ends, and then we could draw those lines again. So everyone crystal clear. In my humble opinion on the higher time frames, whether you're talking ES, NASDAQ, other than the IWM and the Dow, we should get blow off tops. Those say we need a blow off top. The IWM blow off top is a move back toward the 22 to 2400 range. That's their blow off top, meaning it's not a new all-time high, but it is a big rally for the for the Russell. In the short term, because the big picture says we more than likely need a little something to finish this picture, that blow off top, we'll probably get to all-time highs one more time. On the smaller time frames, it's showing just the opposite, that this doesn't look like that move is quite finished, and we're probably going to get a lower high and a lower low to then set the tone for a three-wave correction. And the correction is this going to work our way to a blow-off top once it reverses, or are we going to end up with a three-wave and we bog down around that magic Fibo and set the tone for the much bigger move lower? This is going to be very enlightening once we get there. So if you're just joining us, I think we're more than likely on the lower time frame need one more flush to set the correction. On the higher time frame, I think we still need one more blow off top to satisfy its movement. And that's why we want to see, once we get what we're looking for, do we get a three-wave correction to stop and sets uh-oh, or do we get the blow off top? And this will be some make or break levels at that point to tell us which ones are going to be. Fair enough? So then we went to black gold Texas T, and we were talking about the importance of the new low. I've been saying it for many months that we needed a new swing point low below that May 23 low of 63.64. Why? We had all this overlapping, chopping, grinding, grunting, laboring action. And before we could set technically on the picture to go higher, we needed a new swing point low. Now, we have a couple of options here that we're going to go and make the big run up, and we're going to start blowing doors to the upside and start pushing up toward that 90 to 105 area. This big box up here. Or if we can't hold this 60 target, then we're going to go down to 50. That's the next big support zone. And what I was showing, if you go to like a monthly, when COVID shut down, our futures went to negative and our US oil basically went to zero on the scale. So it kind of fudges our ability to do a proper 3.2, 2.2 using our Fibonacci retracement extensions. However, if you look at this and you kind of say, well, I'm going to use the swing point low right around 0. Because you got this big wick, and again, it went negative, but I'll do it on this one and I'll do it on the regular, I guess down here. If I can squinch this enough, right around 0. Because again, it went way negative because of COVID lockdown. But that puts us with a 618 retracement right around 50 bucks. Can't really see it right there, 49 and change, basically a $50 zone. So if I now zoom this up on like a daily and stretch this out, now we can start to see it's simply a retracement. And that's why it's so important. If 60 doesn't hold, Harold, we're likely going to go visiting 50. See it? So two things with black gold. Dan, how accurate were we? I warned you that, look, man, any rally at this point should be sold because we really need that low below that 23.63.64 low right there in May. To clear all this overlapping chopping action, we needed a new low to set the tone. Our indicators are oversold, so no reason to believe that we won't see a bounce. We're going to get a bounce. If I can get to my chart, turn all that out, get to my chart, and let's get over to this one. That's the one I wanted to see. And here's black gold. Remember I kind of warned you the other day? We even drew the Picasso that we're likely going to see this go from a slingshot up to a slingshot down. And even though we were rallying, we were likely going to get that flush and the weekly would come back to oversold. So no questions, buy the PAI hook when the weekly hooks. Will it then be, Harold, similar to our markets? Are we going to get a three-wave retracement to bog down up at this upper 618 retracement from the high to the low? Or we're going to go ahead and get that breakout to where we're going up to 90 to 100. Either way, we're going to have a nice bounce coming. So pay attention to 60. If that doesn't hold, we'll probably go down to 50. Even if we go down to 50, we get a weekly PAI hook. We're going to buy that and expect this thing is likely going to go rally. Now on the graph where I'm going to draw the Magic Fibo of the Elliott wave, that we're either in the midst of what we discussed, this prior high to this low is the A wave. Is this rally here the B wave and all of this overlapping going to be the C wave? If that plays out that way, and what am I saying? This being the A, this rally here is already the big B, and all of this overlapping chopping, if we don't hold that 60 zone and start bouncing, then this is probably going to go down that 50 zone or a little bit lower for the C wave, which still sets up a bounce later for the bigger degree high-low retracement. Amen? Otherwise, I talked about this for months, that this is potentially my A, and this move up here was the little a, and all of this overlapping chopping is the B wave, little b. But in order for this to play out, we really need to see a new swing point low. So far, so good. We got that. Now we need it to hold to start going up in little c, which would put us up near that 90 in zone, little c, to then make this bigger B, to then set up a push lower down to 50. I think we're going to see 50 no matter which way we go, either down first or we go rallying up in here, then come back down. But I do think this 50 zone is in our future. Pay me now, pay me later. Amen. So what's it going to be? A, little a, B, and little c come up in B, then down, or is this A, B already in place, and we're just going to keep chopping and breaking down toward 50? So, Dan and others that trade black gold Texas tea, I have no problems buying a PAI hook, especially on the weekly. None whatsoever. I have no issue buying a daily PAI hook. Let me bring this over here. So we're oversold and we're waiting for a turn and reversal. So be careful that if we can't hold, we're probably going to flush down and continue to break down toward 50. Otherwise, if we start bouncing, same rules as over here. Take aggressive profits, be in a position of authority, because I do think at some point, whether we decline to 50 first and start doing the bigger retraction, or this is in that bigger C wave, we still need a big correction coming. And likely from the big picture, I go over here to the charting platform, we're due to go up into that 90 to 100-ish, maybe 105 zone. Amen? And where does that come from? That comes from the much bigger all-time high over here. And you do the high to low, you get a 618 retracement. That would put us into that 90 to 105 zone. That's it. So we're due for one of those. So it's either we decline to 50, then we go up there, or we start bouncing and we get up there, and the smaller A, B, C coming down later. A lot to think about. A, B, C, you're confusing. No, we're going to get a bounce no matter what. The question is, if 50 to 60 doesn't hold, we're likely going to keep declining toward 50. Either way, when that weekly PAI hooks, I'm interested in buying. There's the daily, here's the weekly. And remember, I drew this on the archives that I said this little slingshot up down here as we came down and started slingshotting up. I said, based on that picture, we needed a new swing point low below that 63.64 May 23 low to set and correct this overlapping picture. We got that, and I even painted the way that would work is this would go from a slingshot up to slingshot down. Look at that, Emil. Exactly what we got. So now we're going to get some sort of weekly cycle up. Is it starting now, or do we go down to 50, then start cycling up, or we start getting low, high, higher, low, higher, high? We start breaking out, setting the tone, we're going much higher. But in the coming months, we're going to get a weekly cycle up, in my humble opinion. And that's going to set the tone whether we bottom at 50 and start doing it, or we hold at the 60 and start doing it. That weekly is going to give us a cycle up. Why? Because we even have a monthly in oversold territory. Right? So when the big boys all line up, I didn't mean to change that. I clicked on the wrong button there, sorry. When the big boys all line up, it's telling me we're likely going to end up with a monthly hook and a cross, and we're going to get that weekly cycle up. Could be weeks from now, could certainly going to take months to do it, but the monthly's oversold, right? Monthly's oversold, weekly's oversold. Bring my auto scroll back. And my daily's oversold. So we got what we needed, no questions asked. We got what we needed right there. So be careful. As it starts to bounce, be certain to get into a position of authority if you're trading this, that this may fizzle and give us that push down to 50. Or this could be the end and we start just stair stepping higher. But once you're in a position of authority, then you don't have to worry about it. You're either going to get pipped out for more profit or it continues to run. But pay me now, pay me later, we're going to get a much higher degree correction, which is going to send us somewhere that 90 to 105 that we've been talking about for months. And this is a lot of consolidation. Whether you're looking at the daily, the weekly, this has been a lot of overlapping, chopping, grinding, grunting, laboring, corrective action. So is this the bottom and we start reversing for the bigger correction up? Or do we go a bit lower to set the tone for that correction? But the software is definitely setting up for the bigger bounce. That's why when we talked about it here, my daily, weekly started to move. I told you, be sure you're taking aggressive profits in this zone because of prior price action. We were due for one of these. Now that we have it, price has to prove itself. So Harold, what do we do now? You come back to your daily chart, and whether you're looking at the futures or the regular U.S. oil, however you trade it, USO or UCO, there's many ways to look at this. But in order for us to start getting somewhat bullish, we need to start breaking back above this Magic Fibo, right? Magic Fibo line, we got to break above. That would set the tone for this bottom's probably in place, and we're going to go stretching up toward that 90 toward 100 zone. Looking at our, so I'm showing you with arrows, we need to have some sort of bounce that from this high to that low, we start breaking that 618 retracement, which is right around that Magic Fibo, to then set up our extensions further up, right? So do the 2-point tool from the current high to the current low. Look where it's perfectly lining up, right above the Magic Fibo. You see, I even set it before I drew this out. We start closing above that zone, then game on, 83, 86, 93, setting the tone. But if this fizzles and we can't go breaking above the Magic Fibo and we flush down to 50, then it's rinse and repeat, right? Still kind of rinse and repeat. We would then, from the same high to low, we'd just stretch this down a little further. And we'd still need, because as we keep declining, the Magic Fibo is going to continue to slope lower. So we're still talking about getting above that $68 to $70 range, no matter how you slice it. Even with us pushing lower, we still got to get above that 68 to 74 range, Magic Fibo, to set the tone for the bigger move. So no matter how I play this, if I buy the bounce, I get to a position of authority in case we get one more flush and we come down to 50. Then I'll look at buying the bounce again. When my monthly, weekly, and daily are oversold, I wait for the PAI to hook, and then I set the tone to get to my position of authority. But based on the technical picture and Elliott wave picture, we're due for a bounce. Whether this is the A, the B, and we're finishing C down, we're going to get a bounce, or this is the A and this is the little a, the little B, we go up in that little C to now produce our bigger B. Head spinning yet, guys? A, B, we still going to come down to 50 zone for C. So this is unavoidable in my humble opinion. The question is, do we start bouncing first or do we fizzle and decline? But even if we do that, after an ABC, we need some big time retracement either way. Okay? All righty. So I don't think the 50 is off the table. Even if we go ripping up here, we'll come back to play, or we don't fizzle and go up there now. We come down here, we're still going to go up. Amen? All right. Gold. Kind of warned you about gold. Some people think gold's retracement is over. And I warned you we're probably due to come to the Magic Fibo line. So be careful with this. I warned you when we were up here, right? Didn't I say it? We were due as we were reaching extension after extension after extension. Man, we needed a retracement. Some say this is the retracement, and we're in, Elizabeth, I'm coming to join you, honey, doom and gloom. We're just going to keep ripping higher. I agree with that, but I'm not convinced that this correction is over. I really want to see it come back to the Magic Fibo. We're a far cry from there. And even if you start looking on some lower time frames, like a 4 hour, kind of like I said, the markets, this does not look complete. If this is one, that's two, three, four. Maybe that's the five, and this is the beginning of a 1, 2. Maybe, but it looks like it's still got some unfinished business. How about on the daily? That looks like a 1, 2, 3, especially on this daily. This looks like a 1, 2, 3, and we're correcting in four. 1, 2, 3, 4, 5. 2,800. This is still sloping upwards. This could take days for this thing to continue to play out. So I think, Mr. Tucson, this baby is going to get sucked down into 27, 2,800 range to bounce off the Magic Fibo. So be careful if you're loading the boat thinking this is a nice little pullback. It came down from basically 3,200 to 2,900. Ooh, that's a nice retracement. It's time to buy, buy, buy. If your goal is to buy and hold long term, yeah, we're going much higher. In the short term, I think we're going lower. So, based on a 1, 2, 3, the four should limit going no higher than about 3,000 and change, say 3,100. So, as long as we stay below 3,100, I think we're going to get another flush. And the Magic Fibo is critical because we're long overdue. And I'll show you this from that bigger picture. From the prior high to the low, we broke that 618, set the tone. We were going 75% chance here, 70 plus plus there, onward and upwards. We talked about reaching 3,000. We then went on to the extension, almost to the 2.618 extension. And typically, you do not just continue to go extension to extension to extension to extension without a visit to your Magic Fibo. The percentages go extremely lower and lower. Doesn't mean you're not going to get up here, but it means that with us to just keep going and stair stepping without a visit, the percentages start 75%, 70 plus, about 40%. Up at this number, you're talking into the 30 to 25, 30 range. Then this one gets down about 20. You start getting to this extension up here, it's in the teens. Then this 423 is about 5%. And then this 618, 6.86 is like 1%. So you think gold's just going to keep ripping up there? It's possible where we go to 4,000 without ever visiting the Magic Fibo, but the percentages are so low. So when I throw out percentages that when you high to low, you break the 618, you got a 75% chance. That means 75% chance. But once you start getting to the 1,448, 1,272, 1,618, your percent that you're just going to keep ripping higher toward the fib ladder next gets lower and lower without a visit to the Magic Fibo. Got it? That's where that comes from. All about the Magic Fibo. So if you don't have the Magic Fibo, you're missing out. And all you got to do is add it to your chart. There you go. Join us and you'll get the Magic Fibo. Any questions on gold? Be careful. Based on the lower time, kind of sounds like all the markets, right? ES, NASDAQ, etc. Looks like this bounce is not the one that's going to go breaking out. It's the one that needs another flush lower. And even on gold. Silver. How about silver, Mr. Tucson? We talked about potentially coming lower into my salivate country zone, Emil. 25 and lower. I think it's going to come to visit. So if gold continues to flush, what did I say the other day? If gold can start flushing toward the magic Fibo, silver is going to flush down to this extension into my 25 and lower range, where it came fairly close, 26, getting closer to 25. And if gold can flush the rest of the way to reach the magic Fibo, then we're definitely going to be down here. So, those of you that are interested, I think silver is a tremendous buy. Absolute tremendous buy. Why? Because the potential for us to go higher is already on the charts. We have a 75% chance, and we got to go back out to the weekly to get the bigger picture from the prior high, all-time high, and even from the weekly, we got to condense this a bit. But this chart action is already in the books. And that states from the all-time high to this COVID low area, we already set the tone. We're going to $60, $70 range. 75% chance we go into 60, 70 plus we go into 70. And Harold, what is that? From the high to the low, we closed above that 618, that 27 range. We're even up at 30 plus, so we clearly crossed above. So the rule is the magic Fibo extension levels, we have this 60, 70 basically in the bank, in my humble opinion. We're going to get there. The only question is, can we get that flush to 25 or lower? Well, Emil, what's the difference if I buy at 27 or 25 or 24? Not that big a deal whether I'm buying at 27 or 24 and we're going to 60 to 70. So go to Costco and buy a silver bar, buy some SLV shares. Maybe you nibble now at 27, add some more when it gets down to 25. But this is a great trade. And again, I can't say, well, Harold, we're going to be at $60 to $70 range exactly March of next year. Definitely. We could be up here by year end. If our Elizabeth coming to join you, honey, and the market start tanking like we're expecting at some point, we could be up here very quickly. This thing is grinding up, ready to go blasting off. So even with the retracement I've been calling for, this trade up here is not changed. Great opportunity. And the lower we go, and that's what Emil and I, we jokingly call that salivate country. We get to 25 and lower, you're talking a double to triple your money in a matter of a year, two. I don't think it's going to take a decade or anything like that. I think silver's going to go ripping into the zone. And typically, when our markets are plummeting, gold and silver make a run, but look at gold. This is why this correction was inevitable. We had our markets unbelievably tanking the last, and gold didn't go ripping higher. It pulled back with the markets. Interesting, isn't it? So gold is sometimes, contrary to when the markets are crashing, people run safe haven of gold. When in this case, the last several days, as the tariffs punished our markets, gold went down with it. I warned you this was coming, no matter what. But when we get the big doom and gloom, Elizabeth, I'm coming to join you, honey, I do think gold is going to be run to for safe haven, and this thing's going to start pushing in the upper threes, start heading to 4, 5,000, etc. I called for gold being at 5,000 years ago, and this correction took a long time, but the breakout was inevitable, and sure enough, it's done it. So in closing on gold, I don't think this correction, in my humble opinion, is over. The lower time frames you drill down, it doesn't look like it's finished. Looks like it still could go lower. And the more you use our magic Fibo and our extension retracement levels, the more you'll realize that, again, you don't just go straight up the fib ladder and never get retracements back down. And typically that's where the Magic Fibo comes in. We hadn't touched it since way back here in February 24, last time we touched it. So when we look at the prior high to low, we're reaching far numbers of extensions. That's even screaming more. We need to come back to that daily Magic Fibo. Amen. So be careful. I could be wrong and this thing could go ripping. It is definitely going to go higher, but I think we need a further retracement to set the tone. So my salivate country like silver being 25 or lower, my salivate country with gold will be 2,800 and lower to then set the tone for the next run up, 32, 34, onward and upwards 36, 4,000, 4,300, etc. Got it? All right. Last but not least, got a lot of work cut out to get all these recordings and my jabbering when the uh, screen was on pause. But I'll cut all that out, make it seamless. All righty. So Bitcoin is very concerning as well. We got the dip down to the all-time high, prior high. And what alarms me, Harold, and I still think we're going to go busting out, we're still going to need that blow off top across the markets, the S&P, the Nasdaq, the Dow, etc. So I'm not convinced that this is over by any stretch, but we need to get it back above that line of descending lower highs. I didn't like this big rip into the Magic Fibo retracement, rip right back into it. Looked like it was going to go breaking out. Woohoo, we're going. And then it got flushed. So I'm not saying it's over, but we need to start to see we're running out of time. And we don't want to see it start to take out the bottom of this box. That starts to set the tone. We're going deeper. And if we don't hold this zone, then we may come back to this consolidation zone in the 60 to 50,000 range before we then start bouncing again. So this is a critical make or break zone for us to hold. And I really don't want it going much deeper. We could go maybe a little bit more towards 72, and we reached a low of about what, 73, 70, what was that low? 74. So we could maybe go a little bit lower, but this is the all-time high prior, actually right here. So we're very close. That was the FOMO, fear of missing out high before the halving. And we've been holding this downtrending lower highs up here like we did over here. So this is what I'm hoping we go blasting off one more time like we kind of did over here. We finally broke it, retested, and took off. Well, we need to break it, retest it, and take off, and we're running out of time. We still have months based on the halving, 12 to 18 months, still puts us out to September, October. We've been discussing for all year and then some, but price needs to prove itself. And I can't see Bitcoin ripping up to 150 to 170 zone we've been calling for without that blow off top of our markets, ES, NASDAQ, Russell, etc. Amen? Any questions on that? So keep a keen eye on this. I still think we got time to blow off. We need a blow off top. I still think every time Bitcoin halving has occurred, we got a 1618 retracement, which puts us up here in that 175 zone. And every time from the crypto winter low, which was back here at 15,000 in November-ish of 22, then we expect that 10x would put us at 150 and change. So we still got a ways to go. And I won't throw it, you can't say it's over, but this holding lower trend, lower high trend line, it's time to break it and set the tone. We're going breaking out. Got it? So I'm still in it to win it. Yes, I took profits when we were talking, begging and pleading. Anything below 20,000, it's such a good deal. It's a crime to be able to buy Bitcoin at 20,000 or lower. You heard me say that hundreds of times during these months when we were below 20,000. Then if we got to the 25 to 30,000 range, and during this corrective point, which lasted for quite some time, April 23 to September, October 23, so a good 6 months or so. Anything below 25, 30,000 is a tremendous deal. How many times did I say that? So low below 20, it's a crime to be able to buy it that low. And such a great deal below 25, 30,000 range is just unbelievable deal. And what did it do? So it hadn't been a flop, but it hadn't reached this potential either. I said months back that the big move is definitely over, the big bulk of the move. I still think we're going to get that bigger move. And it's kind of like the others. This really needs one more big blow off top to kind of make this move look complete. But in the short term, don't get ahead of yourself. I haven't loaded up on any additional positions. I took profits on going from 20,000 and lower up to 100 plus thousand. So yeah, some profit taking in there, but I still have some skin in the game and I'm still looking for this thing to go breaking out. But until then, I want to see this zone hold and us to start breaking the downtrending lower high trend line. And I know I have two of them here, but it's just to show from the higher one we've tested, hold, went back, retested, 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 and then the much steeper slope, high, lower, high, lower, high, lower, high. We need, and they're crossing. You can see where the cross is. So I'd like to see us rip above, get above the Magic Fibo, break those two lower high descending trend lines, sets the tone for our breakout. So until we start clearing the hurdle up here at that 97-ish range, which from the high to the low, which is this new low, that sets us somewhere around 97,000. So we start breaking the lower trending lines, we start clearing 97, then we start targeting 114, 119, onward and upward 130. If we can finally get up here, I think our Mara and our uh, BT and these miners are going to go ballistic. This is not off of the table, but I don't like this recent price action at all. I want to see it break the trend line. I want to see it break the Magic Fibo and break that 618 to the upside. Then it's game on. Amen. And don't worry, we still have plenty of time within our 12 to 18 month window. We're just now not even there yet. It was toward the end of the month. I think it was April the 28th last year when the official halving occurred, somewhere like that. So we still have a few more weeks to get to 12 months, much less to 18 months. Amen. So watch this technical picture because as we go into class each time, several times a week, we're going to see that. And when we start breaking out, getting above that 97-ish range, that sets the tone 114, 119, 130. And when we start getting in this zone, the miners should go berserk because that's when the profit margin goes through the roof. And I would love, and I hope I do end up seeing this 130 rally to the 150 to 170 and higher range, still get that big push. Then these guys should literally go to the moon. The mining stocks, that is. Amen. So take care. God bless you. We love and appreciate you. As we like to close, that's it and that's all. So please be careful. Do we get this bounce and is it going to manifest or are we going to get that last flush up and until we start breaking above that Magic Fibo line? Then we could start talking about potentially getting the blow off top sooner. Otherwise, the lower time frame says this is going to fizzle and we get one more flush before then we get the bigger retracement. Got it? So keep that in mind. So again, take care. God bless you. We love and appreciate you. That's it. That's all. We'll see you tomorrow.